Well, good evening and welcome to another edition of Capital Market Live on Channels Television. Well, it's been quite an eventful week for major markets that we track, from the safe haven trade, which has seen so much volatility these days, from risk assets like, Bitcoin dropping so much, then rising again. Then we see some other indexes, doing pretty well this week. But we'll unpack all of this and more. But first off, let's kick off with what played out in Europe now. We see European stock markets close higher on Friday as a week full of, corporate earnings reports that drew to a close. This week has been share prices influenced by, earnings updates from, some of Europe's biggest companies, including pharmaceutical giants, Novo Nordisk, oil major Shell, and various banking heavyweights. And we see the impact right there for the market. We see the FTSE 100 there, 0.59% to close. The German DAX, that was up 0.94%. And the CAC 40 in France, 8,273 points, a big 0.43% advance. That was for the Friday trade. All right, going to other markets now. Let's see what played out in Asia now. We see Asia markets, they were mostly mixed on Friday, but majorly down for that Friday close. The Hang Seng Index closed 1.21% down. Shanghai Composite 0.25% down. Now we see the Nikkei 225 0.81% to close that day. Definitely, some mixed sentiment mostly for that Friday. Even when you look at the oil market, you see what played out for the crypto market. There was a lot of volatility with tech stocks, taking a beating, and definitely some of those software companies also taking a beating earlier in the week. All right, to the U.S. markets now. See stocks futures. They surged. Mostly stocks in the U.S. surged on Friday. Even though we saw the futures, there was tending to the green earlier on Friday, and it did play out for the whole market there, closing in the green. There are big jumps there. Dow Jones Industrial Average 2.47%. The tech-heavy Nasdaq 2.18% advance on Friday, and the S&P 500 a 1.97% advance, 6,932 points for the index. And definitely with most of those stocks climbing in the U.S., we did see see all of that reflect when it comes to tracking most of these indexes. So that was a picture right there for the global markets that we track. And when it comes to the metals market, the kind of drops and rises we see there now, quite surprising. At this point, we did see silver, after gaining past $100 per ounce, we saw a big drop, and it did drop again. During this trading week, definitely gold also dropped. I think gold was the lone gainer for the week. When we track most of those metals there, silver, palladium, all of them struggled this week. Talking about the metals market. So, definitely we'll see how it plays out for most of these asset classes, going into this week. All right, bringing it down to Nigeria now. The NESD Securities Index closed at 3,689 points, up by 1.64%. However, activity closed in the red elsewhere. Central Securities Clearing System, PLC, led the gainers with a massive 32.10% advance. The jump there, while the geofluids dominated trade value. On the flip side, industrial and general insurance saw 18.18% dip there. So that was the color right there for the unlisted market. And for the NGX, the all-share index finished in the green as closed at 171,727 points, with market capitalization hitting new highs, closing at 110.235 trillion. Trading activity all closed in the green. The sectoral performance was mostly green, with oil and gas leading a 10.88% rise. Several stocks also delivered standout gains, led by Deep Capital Management, RT Briscoe PLC, Zichus Agro Allied Industry PLC, Abbott Mortgage Bank PLC, with double-digit percentage increases, putting them among the top performers on the exchange. Meanwhile, losses were seen in names like Deep Capital Management Trust PLC, UH Real Estate Investment Trust, Red Star Express PLC. The most traded stocks we see were Chams Holdings Company PLC, Axis Holdings PLC, and Universal Insurance PLC there. So that was a picture right there for the local boss. All right, to other economic indicators. Nigeria's business activity expanded further in January 2026, as the Central Bank of Nigeria Purchasing Managers Index rose to 55.7 points, signaling a 14th a consecutive month-to-month expansion. PMI readings above 50 points threshold indicates growth for the private sector activity, suggesting sustained improvement in economic conditions at the start of the year. The January figure reflects a continued resilience across key sectors, supported by stronger output levels, improved demand, and relative stability in supply chains. According to the Central Bank of Nigeria data, firms reported increases in new orders and production, while employment levels also showed modest improvement as businesses adjusted capacity to meet rising demand. Input cost pressures, though was still present, but it is slightly compared with previous months, helping to support business confidence. So definitely we like to track what the PMIs are saying, because it helps us make sense of what's playing out for manufacturing right there in the country. And definitely we're going to unpack all of this conversation now in a few minutes, right after this break. Welcome back. Well, let's unpack what's played out so far with the markets that we track, and to help us, make sense of it, we have Mr. Olatunde Amolegbe as the MD, Arthur Stephen Asset Management, joining me right here in the studio. It's great to have you, sir. Good evening. Good evening. And thank you for spending your weekend, with us. And pleasure is mine. I'm sure you've seen all that's played out in the market so far this week. It's been quite a dramatic one. If you're talking about, the safe haven trade, where we've seen, the likes of gold, silver, moving ways we're not used to, at this point. Then we see the likes of, risk assets like Bitcoin, shedding so much, about 50% or more, from the previous highs, then recovering, just a little, that was on Friday, I believe. But the drops are huge at this point. How are you seeing what's playing out, in the global investment, space so far?
Okay. Market reacts to inflation, and particularly global markets are very sensitive to events in the U.S., for instance. So the announcement of the nomination of Kevin Walsh as the new incoming Fed chairman obviously means that investors and analysts alike will start combing through his policies in the past and what he's likely to do, if he gets to be the first chairman in May, and then obviously the market will now react to that. So we've known the policy of the present Fed chairman. He has mentioned in the past that he feels that the Fed is not moving in the kind of direction he expects it to be moving. He feels that growing the balance sheet of the Fed is not the right way to go. So ultimately, the market feels that it will tend towards a policy that sees reduction in interest rates and reordering of the priority of the Fed itself. And that is why you sort of see a repositioning, if you will, by investors and analysts away from investments such as gold, defensive investments such as gold, and away from Bitcoin towards more traditional investments. So that's why you saw the kind of flexibility or the kind of volatility we saw in the market. But things will settle.
It's quite interesting because sometimes you just feel these asset classes just look for any excuse to drop. At this point, especially where you've seen, new highs,
right.
Especially with the likes of, gold and silver, because, I was wondering, when we would see a drop, because nothing goes up forever.
Absolutely.
Even though we're hearing calls for maybe a $6,000 per ounce gold, maybe $10,000 per ounce at some point, in 2026. We're not sure if that's going to happen.
Yeah.
But definitely these markets can be dynamic.
Yeah, but that's the way efficient market operates.
Right.
No information, small or big, is left unresponded to. So, and that is why it appears as if you are seeing those kind of uncertainties. But that is what markets are supposed to do. If you have markets that do not respond to information, that means those markets aren't efficient. And chances are that investors might not be, assets might not be priced appropriately in such inefficient markets.
Right. All right. So moving away from the global scene at this point, let's bring it down to Nigeria so far. And looking at our index, it's on a tear. At this point, 107. That's a level we've not seen before. New levels. When it comes to Nigeria's exchange. So. Looking at this week, so far, what would you say really drove sentiment? Because it almost seems like there wasn't really that catalyst. But somehow, it rose again.
I think this week, primarily, the main driver, of course, was the earnings report, which, we got quite a bunch coming out last week and this week. And I think investors see good signs in a lot of those earnings reports. So, that will account for some of the gains we've seen this week. Of course, you also saw some major corporate announcements, corporate action announcements, the likes of acquisition of a significant stake in Seplat by the Tony Elumelu Group and all of that, and a few other major corporate actions like that. Those to me were the main catalysts for the kind of actions you saw this week. But of course, you cannot also overlook the fact that the market, the economy itself is being reordered. So clearly there will be a need for repricing. I've said to people that, look, despite the fact that our market has gone up consistently in the last, say, 4 years by excesses of 30%. If you look at it compared to similar markets, the Nigerian market can still be considered to be cheap. Our PE ratio, our price earnings ratio is still below 10. All right. Similar markets have PE ratios that are well above 10 at the moment. And given that the fiscal position of the government, all right, and some of the reforms we've seen in the market are reordering the economy as a whole, you expect that the market will price to meet those reordering. And these are the changes we continue to see. So all in all, I would say that there's significant repricing that is happening in the market at the moment. And I expect that will probably continue for a while.
And talking about some of these earnings, saw earlier this week, we have the likes of Transcorp Power, revenue up by 30.02% year on year. That's for Transcorp Power. Gross profit 181.86 billion, up 27.92%. Yeah, we have it right there. Operating profit 105.02 billion, up 7.64%. Earnings per share That's up 14.25%. Total assets rose 42%, compared to the previous year. Then we have the likes of Ardell. Ardell, that's showing revenue of 697.30 billion. That's up 20% year on year. Gross profit down 21.48%. Operating profit, that's down 6.66%. Yes, that's good. Earnings per share up 54.43%. Total assets rising a big 495%. Likes of eTransact, that's up 1.08%. That's revenue for the company. Gross profit 14.1 billion, 24.48% rise. Investment income up 6.58% year on year, and profit before tax 4.2 billion. So these were some of the latest earnings we saw this week. Talk to me about what these earnings are telling you about the industries that they operate so far. I'm sure you've also had some earnings that have caught your interest in the market.
Yeah. So you could say that the general trend is that most of the earnings are coming in positive, which shows that companies are finding their feet even if the economic conditions isn't perfect. But for specific industries, you can see that the investors are reading that if, for instance, Transcorp Power you mentioned at the beginning, that company is still able to come up with a very good result, despite the fact that we know that that is an industry. It is operating in an industry with very huge potential, a potential that has not even been scratched, if you will. So if it could be turning out this sort of profit, result at this point, imagine when we get to the point where power generation improves, distribution improves, and all of that, the potential for that company. So those are part of the issues or part of the factors we are seeing in the pricing of some of these counters. Ardell, oil and gas industry, is one that the present government have emphasized that it wants to see investment continue to grow in that particular sector, because that sector obviously is one that is critical to the general economy. All right, and Ardell and the likes of some of these local players are the ones that are making the sort of investments that the government will seek to support in that sector. So and you've seen their results. This result is showing that those companies are actually making progress. eTransact, a major company, we are moving towards tax reform. A lot of those reforms is going to be happening via the use of technology. So payment companies such as eTransact and the like, if they are well positioned, could benefit significantly from such transitions. So a lot is happening, and we are seeing those progress being reported in the earnings that we are getting, which is the reason why you are seeing the market responding positively.
Right, and looking at Ardell, it's had quite the run.
Absolutely.
Looking at that stock now.
Absolutely.
That's trading at about 900 naira.
Yeah.
Per share. It's up about 5.88%.
Yes.
That's for the previous trade, but for the month and for the week, we're seeing excess of over 10% rise, over 20%. So far. So I'm wondering, are we getting overbought?
I personally do not think so. If you see the information that particular company has been putting out in terms of the investment, the new investments they keep making. So that's a company that continues to make investments, meaning that they see the prospect in their industry. And those investments in good time will yield results. And, so I don't think we're anywhere near being overbought. And honestly, it's also difficult not to do a bit of peer comparison there, because if you look at its peer, which is Seplat now, the price, in terms of pricing, you will see that there's a huge gap.
Over 7,000 naira.
So it's very it's very possible that investors are thinking there's some sort of a mismatch there. But why should we have such a huge gap? Though they're in the same industry, but their fundamentals are significantly different. But psychologically, these are part of some of the things that investors do look at to say, okay, look, why should this one be selling at this particular price and this one at this price?
All right, I guess we'll keep tracking those prices because, definitely we're seeing some asset classes from 2025 hitting levels they've not, seen before. And we're seeing that play into 2026. But now, let's look at the economy. Definitely, I know your company, after Steven Asset Management, you guys you have your crystal ball on what you expect for Nigeria's economy, and it also plays out to what happens with some of these stocks that we're seeing. So what are you seeing? What's the crystal ball showing you for Nigeria's economy?
Well,
this year?
As you know, every now and then, every year, we try to look at, well, we call it a crystal ball, but do our basic analysis and try to point in the direction we expect the economy to head for the new year. And for the year 2026, what we're looking at, some basic macroeconomic indices. We feel that it appears that the economy is moving in the correct direction. So if you look at indices such as inflation rate, seems to be slowing significantly. Don't forget that 2 years ago we were talking of inflation in the region north of 30%. Now we are looking at inflation at something like 15% thereabout. If you look at the exchange rate, FX rate has stabilized. It has come down slightly, but it has basically stabilized, which is good for business.
With the Naira gaining over 1% this week.
Oh, absolutely. And so official exchange rates, I think it's puts at something like 1,366 or thereabout. So we're seeing stability in the exchange rate, which is good for business. We're seeing gradually the case is being made, even for the MPC, to actually start looking at, bringing interest rate down and all of that. So some of those basic macroeconomic indices points to the fact that, we're headed in the right direction in terms of where the economy should be headed. Now, if you translate that to the market, all right, because obviously, these economic indices have impacts on the companies that are also listed in the market. Our expectation is that all those indices, that steadiness or that growth should translate positively, to the companies that are, operating in the market. A lower interest rate, obviously, will be positive for companies that are, operating in the market, because it means their finance cost will also be lower. Stable exchange rate is also positive for them. As a matter of fact, stable exchange rate should encourage foreign investors to continue to look in the direction of the country. All right? So our expectation is that all that put together should mean that the market, particularly the equity market, should do very well in 2026. We had, crunch our numbers, and our expectation is that we predicted that the market was going to do 39%. The ASI, the broad index, was going to do upward of 39% last year. That is 2025. It came in at about 51%. That means it actually beat outperformed our expectation. So this year, everything put together, we have said, well, we expect that the market could do north of 45% for this year. All right? Of course, beyond the macroeconomic indices we have looked at and the individual, earnings of the companies, we are also expecting some major moves, some major corporate action. So we're expecting the likes of Dangote Refinery to hopefully come and list. We're expecting Dangote Petrochemical to come and list, and hopefully some other major, public companies will probably end up being listed on the exchange. And all of that put together should lead to the market in the direction of doing maybe about 45%, not of 45% for 2026. At least that's our own prognosis.
And talking about the Naira, I'm seeing you're also projecting a stable, FX market, right there. So with what we've seen play out so far, before now, we used to, when you see the company results, you see FX losses, all of that, showing in those results, but we're not seeing that now. And do you think it's behind us now? All that volatility that we used to see, with the Naira.
Yeah, I feel that we're probably, everything being equal, except something really extraordinary happens, it appears that we have put that behind us. You see, 2024 was a year where, you know, the changes in those policies, the decision to remove fuel subsidy, decision to harmonize exchange rates and all of that, really impacted companies, and you saw, like you mentioned, a lot of them recording significant FX losses. All right, that seems to have, you know, abated in 2025, because most of the results you are seeing for 2025, those FX losses seems to have abated. All right, now the physical position and monetary position of the country seems to be stronger, such that even the CBN is able to provide support to the exchange, to the foreign exchange market. All right, where our you know, FX reserve is north, I believe, is north of 46 billion or thereabout right now. So, and it continues to strengthen, because obviously you are seeing more foreign investors coming, looking in the direction of Nigeria and bringing in investment. So as long as that trend continues, the expectation is that the exchange rate will continue to stabilize, and the issues around, you know, FX losses should probably be, you know, in our rearview mirror for some time now.
And hopefully, whichever risks we see, you know, coming, we're able to hedge against all of those
losses,
as investors.
Yes, absolutely.
All right, thank you so much. It was great having you today, Mr. Olatunde Amolegbe, as the MD CEO at the Stevens Asset Management Company. Thank you for coming on the show today.
Pleasure was mine. Thank you, Led.
All right, so we're done reviewing how the markets played out this week. Definitely, we'll see how it plays out, you know, next week. But from what it's looking like so far, we might still see volatility in some of these global markets. Thank you for watching Capital Market Today. I'm Ladi Williams from the team right here at Channels HQ. Bye-bye.